Oil price is a huge part of the inflation story, and joining us right now is Jeff Currie. He's Goldman Sachs Global Head of Commodities Research. And Jeff, you had called this kind of super spike that we've seen in commodities from a couple of years ago. Since that call, commodities have been up incredibly sharply. I think one of the indexes that tracks all these commodity prices up about 125%. Does it continue?
Absolutely, yes. So do not look to commodities as providing any reprieve to these inflationary pressures. The only way you solve this problem is through increased investment to grow supply. Right now, the capital availability is just not there. There's a capital deficit in these markets. Like I say, it's not about the supply and demand of the barrels of oil. It's about the supply and demand of the capital used to create those barrels of oil. And whether if it's capital markets retreating because of ESG constraints or credit through bank lending retreating because of leverage ratio constraints. At this point right now, this market is severely constrained of capital, and you can see the implications. No investment in terms of greenfield capex or any type of longer term capacity expansions. You don't see the investors in these markets. You see liquidation of financial positions and liquidation of inventories across the board. And you think about this market is twice as high as where it was over a year ago, so it needs twice as much capital, and it does not have that capital. So this is a very serious problem. That's probably and I also want to point out right now today, you're at the weakest point in time. We have COVID pressures in China that are likely to be temporary, and you have the SPR, which is temporary. These are not long-term solutions to a structural problem. They're much more temporary.